Okay. Good evening, everybody. I'm Subhash Ghosh. For some of you who don't know me, just in case. This is the third Tech Tuesdays for us, and I guess it's been last 3 months have been an opportunity for us of huge learning. And I guess we've been so far making some kind of a mark in the learning space and the knowledge space. Right. So my firm, warm welcome to all the esteemed panel members out here, and to all the guests present out here at Tech Tuesdays. For some of you who are attending Tech Tuesdays UK for the first time, Tech Tuesdays UK is stemmed from the idea of building a community that ideates, nurtures, and then fosters a free flow discussion of disruptive technologies, which have the potential to impact 1 billion lives. In the process, it serves to contribute by forming a knowledge platform that disseminates information and builds a borderless hub, which is accessible to tech innovators and enthusiasts, as well as startups and established companies. As you would know, Tech Tuesdays UK is a monthly event which takes place on the first Tuesday of every month, and where we actually spend an hour having conversations around technology. One of the most unique thing about Tech Tuesday is that there's no written script, there's no written question. It's a free-flow discussion. We ask our speakers to join, and we have 30 or 40 or tech leaders who come and engage into a conversation. I think this event would not have been possible had we not had the support of our partner, KLN Getz. I don't see anyone from KLN right now, but I'm sure they will join sometime. And last but not the least, I would request each one of you to spread the good word about Tech Tuesdays. During the event as well as after the event. We have a Twitter ID, and we also are LinkedIn in the same words. We also have a video bite station wherein we'll probably request some of you guys to come and give a short feedback about the whole event. So please try and hang around after the event during the networking and drinks. As I just mentioned, every episode of Tech Tuesdays is based on a particular theme. And the theme for this evening is FinTech, which is just one of the many things that London is known of. And today we've got an amazing panel with us. Let me take the opportunity of inviting them and request them to take their seats. Can I have a round of applause, please? We have Anish Thapa, who is the Vice President at Trustly. Anish. We have Paresh Davra, who is the founder and CEO at RationalFX and ZenPay. And we have Tom Square, who is the Chief Commercial Officer and co-founder at ShieldPay. So I leave the forum to your able hands, and now all yours. So thank you so much for joining.
Thank you so much. Are these on? I'm just going to put this on. Yeah. There we go. Maybe we just go around and just a quick introduction for everybody. Anish, do you want to kick it off?
Absolutely, thank you. Hey guys, I'm Anish. Originally from Nepal. I went to school in India for a few years before I ended up in the UK for my undergraduate, and then fell into payments, a company called WorldPay, where I was for 7-8 years doing various back-end operation roles and the front-end commercial roles. Then I went to a company called Checkout.com, a startup back then. And they've done it as and then most recently, I've recently joined a company called Trustly, an open banking platform in the UK and Europe, where obviously you pay via your bank account rather than your cards. And that's me.
Hi, I'm Paresh. I'm the co-founder and actually I'm the outgoing CEO of FinTech and ZenPay, as we found a new CEO last week who's joined us now, so I'm excited about that. I founded RationalFX and ZenPay in 2005 with my co-founder Rajesh Agrawal. We've grown it organically without any funding or any debt, which has been an incredible journey, but very hard as well at the same time. And that's us. We specialise in payments and foreign exchange, and we predominantly help businesses attract some money abroad. And we're a customer of customer.
Always good.
Hi everyone, Tom Squire, co-founder of ShieldPay. ShieldPay is a B2B escrow payments platform. So working with the legal industry and real estate to hold large value payments, do the onboarding of both sides, and release the funds when both sides are happy with the transaction. So if you think about a real estate transaction, buying and selling a house, typically it's a high risk transaction that goes wrong quite a lot of the time. Actually having a regulated payments business in between actually reduces some of that risk and is a lot more efficient and cheaper. Kicking off, I think maybe Tech Tuesdays, as Subash said, UK, why, I read about your story about coming over, you and the family coming over when your dad was younger, but why is UK such a focus for FinTech? What makes them strong?
Technically, it's meant to be super open in terms of regulations. It's a lot easier to talk to the right, and it is easier actually. It is much easier to talk to the regulators here in the UK than somewhere in Europe. It's a lot harder. We've been trying to get a license now in Europe for 2 years. It's an ongoing process. We keep getting sent more questions, whereas the FCA are much more. As much as people might complain about them, they're much more efficient than I think the counterparts in Europe. So I think regulations is great. Banking infrastructure is great. I know that everyone's here to disrupt the banks, but actually without them we wouldn't operate. They're quite helpful in terms of helping us grow and providing that kind of infrastructure that we need in order to do that.
So imagine you've seen such a growth over those 18 years, that the evolution of the banking industry certainly helped working with startups and fintechs. So imagine that's changed quite a bit.
I think that there's still a number of banks that have been sitting on the fence, but a lot of the big banks have now taken the bull by its horns, and they've created themselves products that we can integrate into, which offers us a much bigger platform for our customers. And I think that's super helpful. And I think that's only come about because of FinTech and the payment space growing so fast.
So still having the legitimacy of essentially those big banks in the background.
Yeah.
Ultimately, that's where people's funds are being held by.
Yeah, and also you have access to so many different markets, so many different currencies. Faster tech. But we're partnered with JP Morgan now, and we can do payments across most countries within minutes. It's via their platform. So although it's us, APIing to JP Morgan because the general person won't be able to get an account with them, it's really them that's powering the service in the background.
Yeah, and Nisha, I appreciate you've only been at Trustly for a short time, but imagine that open banking being the main premise. How have you found that? Certainly with working with the larger players.
I think there's still a lot of work to be done around education, I would say, in terms of actually what open banking is, and other show of hands, does people know what open banking is? Yeah. So probably more people don't know about open banking, right? Rather than paying with your card payments, you basically connect your bank account, where then you have a transaction go through that, right? So in a card payment in the UK these days, you have to log into your bank account anyway to go through the transaction with the new regulations that come up on the FPSC2. So with open banking, you do the same thing now. But it's a lot more secure in terms of there's no card details involved, right? The fees are a lot less in terms of there's no card issuer fees, which takes a big cut. No scheme fees for the likes of MasterCard, Visa, and lot as well. So there's definitely benefits around that. But in the UK, it's probably been around for, I would say, 5 odd years now, and it's still not in terms of where it needs to be. Right? I think data last month came around. I think there's 6 million active users in the UK. But you look at how big the card payment is absolutely ridiculous, right? I think that's why I think for us, in terms of open banking, there's a lot of education that needs to happen around why it's good, not just for the merchants like the likes of the big enterprises, but actually for the end consumers. Unless people over here use it, it will never be as popular, right? If you look at contactless payments, the technology came about, I think like 2005, 2006. Until the TfL and McDonald's actually implemented that in 2014, 15, it then took off. And now, I guess I don't even know my PIN, right? Because we all use contactless payments. So I think that's why I think it's a case where we have to be able to work with alongside the banks, I would say, because I think they are the ones who are losing most of the business, right? Because they take the largest chunk of the card fees. If Amazon is charged, let's say 1%, that will never happen. But argument say 1%, 95% of that goes to the actual card issuer. Let's say NatWest, Barclays, whoever, and the remaining 5% is shared by the schemes, Mastercard, Visa, and the PSP provider, right? So they're the ones who are at the biggest loss, right? So for them, trying to get them to do something, open up the data platform to actually have fintechs come and take their lunch. Like, why do they want to do that? Right? Why would they? Right? So I think large parts of it has been driven by compliance, right? The CMA authority, FCA, and the PSD2 coming in has made them open themselves up to fintech providers like Trustly, Ting, and so many others. But unless there is more the benefit around why that is good for the end consumers, banks will always drag their heels, right? And I think because they're losing the biggest lunch, right? Biggest chunk of money. I think I read in one of the podcasts I follow on open banking is they talk about banks are set to lose around 440 billion across because of open banking in the next 10 years, right? So that's why we are working alongside the banks a lot more now in terms of understanding how can we actually work with them so that way they still have some part to play in the whole open banking ecosystem, the payment ecosystem in general, rather than it being us and them. So yeah, a lot more intuition to be done, but it's definitely been healthier in terms of the last few years where banks definitely are taking a lot more interest in what we do.
I guess maybe a quick show of hands. Who has a challenger bank account? Who has a Starling, Monzo, Revolut? Who? Good point. Who gets their salary put into any of those accounts? I think that's okay. So 3. So I think that's ultimately one of the challenges at the moment is you have the bank, you have the challenges that come in, but you still don't have the safety and security and brand that you have with a Barclays, HSBC, Santander out there.
And the trust.
And trust, exactly.
And I have my own personal experience to share with Revolut and Monzo and bank. There's nobody to talk to. That's the biggest thing. When my salary came, I was like, they would not release the salary for some reason. And I was trying to talk to somebody. It would not. There was nobody, there was just a bot to answer. And it took me like a week to get my own salary. And I just deleted those all 3 accounts. So again, personal experience.
That's probably gone in the black hole that they released recently. I don't know if you guys saw the annual reports from Revolut. I think the auditor said we do have 400 million worth of revenues, but we can't actually qualify if that's where that's come from. Right? Your salary point went in there.
Yeah.
In terms of where that could be, right? So I think you're right. In terms of, I think I used to check out. Revolut was one of our main customers, and it then became a competitor. And I think it's very much a nimble fintech where it probably is trying to sell on how cool this is rather than how good actually the products could be. But they are doing a lot of work around it. I think in terms of what they're trying to do and absolutely disrupt the whole personal banking scene, especially in Ireland, I would say. Most people do get this salary into the regular account in Europe as well. I think they've definitely targeted a certain niche rather than the common customers, I would say.
I think you see it a lot when maybe non-UK residents come in and start working in the UK. It's fairly easier to set up a Monzo account and get your side paid into Monzo, so that's actually quite an influx of that. It's also really interesting that when you were saying about the banks, about how they essentially diversify, otherwise all their lunch is going to be taken. You look at Visa and MasterCard, who we partner with, if you look at their acquisition strategy over the last few years, it's about going horizontally, vertically into that supply chain because cards are not going to be the focus in the next few years. Open banking is actually going to destroy the card networks. And so you'd see them buying KYC providers and B2B payments. It's all about working with what's the next thing.
So do you find actually, in terms of your business, how reliant you are on cards actually? Do you find people who saying actually, do you still want to be able to pay with cards, or do you find people branching out of cards?
First of all, we only went live with Open Bank towards the end of last year with you guys here, and
Was good.
and prior to that, obviously we've got 2 brands. The brand that does remittances is ZenPay, and a vast majority of those people like to pay by card, and that was because we found it very difficult to pass on the fee because you're not allowed to pass on the fee. So we had to change the whole pricing model and do some changes around it. We had a lot of people complaining, so hence offering an alternative at the same time, saying you can just use open banking and it's free, and you don't have to leave the platform, and it's it's secure. If you trust us, then you're going to trust this platform that we've integrated into. And I think there's been a decent uptick from that, but you're right, it needs a lot more publicity or something to encourage people to use it. So people will still leave the platform, go to their bank, do a transfer, then use the open banking facility.
No, that's true. And I think it's the case where, I was talking to one of the customers the other day about how much can we actually encourage the consumers to end up using open banking, right? I think large parts of using cards has been points, especially if you use credit cards, right? If it's the points and rewards that you get from using cards, and also in terms of protection, because like when banks do provide some form of protection, if you do lose money, if you default, etc. I think open banking does reduce the fraud element of it, but the card reward element of it is not there with open banking, right? I think there's been a study done in terms of how many people actually benefit from the reward section in terms of actually using the card. And I think there was this correlation about if you have a very high credit rating, and in the UK majority don't, only the top 10% of the ones who have the high credit rating are the ones who benefit from the rewards. The bottom 90% don't have the benefit. And I think for them to be able to encourage them to use open banking, consumers have to be educated. But merchants, like whoever's providing this microphone, have to pass on the benefits of the lower fees to the end consumers, right? Because you must be charged a hell of a lot of money, especially you as well, right? In terms of what the card fees are like from these card payment providers.
Well, you have to be a bit sneaky about it, if I'm honest, because you're not allowed to actually differentiate between how if a customer pays from bank transfer or they pay by card, technically they should pay the same amount. There shouldn't be any extra additional fee. Yeah, that's.
Is it a regulation?
Yeah, that's a regulation.
But that's not necessarily the case. Yesterday I transferred money on using Wise.
Yeah.
But clearly they charge differently.
They do, but it's how they charge. So they say like it's a faster payment, or
No, it's just debit card or account. Very clearly on the Wise.
When you go through
when I'm trying to fund
Yeah.
Wise wallet,
yeah.
it clearly says if I'm funding it through debit or credit cards,
Yeah.
then they're going to start charge me a certain fee.
Yeah.
But if I'm funding it through my bank account, I'm being charged less a fee.
Yeah.
And they're again very clearly differentiating an open banking led pull versus go to your bank account and push. Both of those account transfers have the same fee, but at least they're very clearly differentiated. I'm not entirely sure if it is regulation.
Unless something's changed recently, or they found a loophole, it's been a bit of a struggle actually over the last.
So how they do it actually?
But I'm sure the money is reached, so I'm fairly
of course,
comfortable with that.
I'm sure that's
I think that may perhaps because you are funding your wallet rather than you are buying
Which is how
a
most
product
money
from a
transfers work.
merchant.
But of course, it might be.
So if you're funding a wallet, then that's generally outside of the PSD, the no differentiation rule. So you're buying stuff from a merchant. That merchant cannot make a distinction between you're paying by cards, I'm charging less. You're paying by this, I'm charging more.
Potentially.
Yeah.
You should introduce yourself.
Different merchant code.
I think that's right. Thank you.
Kaizang, KNL.
So
We also got to remember though that we're very much talking about UK market development in terms of where cards are very, very dominant. They go to across the channel to Holland, they don't use cards and they hate giving credit. And that's just part of their culture. That's not how they work. So you're going to have very different. I guess you're going to have that experience. The global nature of business is that people's attitudes and tastes are very different on a country basis.
It depends as well which country it is, and if you can have a much easier experience paying by card as opposed to filling in lots of documents and having to try and arrange a transfer. So in that case, people pay by card. But yeah, absolutely like. And the trust level is different. Like in those sort of places, you've got so many other options to make payments, and people are so used to it. So none of that's been really introduced here. Where it's not really the British way.
Talking about credit, maybe a well-used term of buy now, pay later, which has obviously had to be discussed at some point. What does open banking? Obviously, it's a challenge. There's lots of benefits for open banking, but from a consumer perspective, buy now, pay later. And I think even read today that the 55 plus age group is actually probably one of the most prolific or the fastest rising group of buy now, pay later.
Yeah, I think that is the case where, like, see, so at work I used to partner with one of the main providers, Klarna, right, which is probably the forefront of that industry in itself. And I think being in the payments industry generally, you're always biased because you know the ins and outs of how they or what they do or they don't do, right? So I've always had a good feeling about these type of providers. The reason being is, especially I think the argument was, if you don't give them Klarna, for example, they would have put it on a credit card anyway, which charges them interest, and that still has a effect of debt anyway, right? But I think it's the case where it was so easy for the young consumers to be able to use Klarna, and that was the thing. But if you look at the benefit it provides to many of the providers, I think I saw the same as well in terms of the flexibility, and actually if you can control that, and that's one of the tiny majority of the customers, I think it's always going to be the forefront of actually innovation. And I think that's why I did see in the recent news as well, there's been talks with the FCA and the UK Treasury about regulation. That has to come because you do have to protect the vulnerable, right? You do have to make sure that people who can be taken advantage of are not done that. But especially for open banking or any card payments, we tend to work with them because we are the ones who facilitate the payments from A to B. And I think for them, we want to be able to have a way of, rather than at the moment you can facilitate Klarna by card payments, you can do that by open banking as well. And I think the main thing there would be the cheaper fees. I think at the moment, if you ask me, the main benefit of open banking, it is the cheaper fees for the merchant, right? Absolutely.
And faster settlement as well.
Well, absolutely, right. And I think it's the case where the fees are reduced by 50-60% compared to card fees.
Yeah, that's
Settlement times, right, in terms of instant, right?
Instant.
So compared to T+1 with the fastest with the schemes, right? That's how that would be. So I think for me, it's always the case of trying to work with them. And I know the fact that actually they do get a bad press in terms of the section of customers who are obviously struggling with the debt provider type of thing. But if they can look out for that from a regulation point of view, I think it's a good thing.
Yeah, because I think it may have changed the Stripe. I'm pretty sure it was T+7 when you joined the first time. It's crazy from a cash flow perspective.
I think it was only Nick Ogden who opened cash flows after Worldpay, where I used to work in. So his was the only company that actually provided interest on the money that was held. But most providers, right, like Worldpay was one of them as well. Worldpay probably in the early days was T+25. Wow. Like it was crazy in terms. But I think Worldpay was that forefront player where if you don't use Worldpay, you could not take up in. So they had that first mover advantage type thing. But it is true in terms of obviously people do take advantage of that. I think it's the case of people have been able to make money out of that. I think the liquidity, how important that is. I think when we used to work with remittance providers, liquidity is one of the key aspects, right, in terms of what your USP type thing. So how do you like differentiate it? So do you tend to work with the PSPs to be able to get a faster and pay more money to them because of that? Or do you tend to wait around T+1, T+2 to be able to get that?
We fund it prior to so as soon as we've got clearance from the merchant, from the provider, we basically fund the payment and send it out.
But then you're still using your own cash flow, right? Because obviously the money goes into your bank account.
Yeah, correct. Yeah.
So that's obviously going to be causing you issues in terms of
Yeah, but I guess our card payment volume isn't that high. But if it was, then yeah, it would definitely cause cash flow issues.
Yeah. And PSP do take advantage of that. I think.
And chargebacks, and so then sometimes they want to hold back a percentage of the money as well for potential chargebacks. So even though they're giving you the bulk amount, they're not giving you all of it.
More reasons to use open banking.
How easy is it to be regulated to provide open banking services?
It's not. So the earlier question you asked was really good in terms of the UK in itself, and it's. I think the UK for me personally, and FCA and the one in Singapore, MSA and MAS are the two of the most friendliest, I would say, in terms of fostering innovation, trying to actually disrupt what they think would be good for the end consumers, right? So the UK itself is actually a lot more straightforward, a lot more thing. I think when you then go out to those other markets, then it becomes very difficult. So I think in the UK, when Trusty first came here around 5 years ago now, I I think it was a lot harder in terms of when they were the first player coming out. And Trustly is a company that they were out in Europe even before PSD came about. They were already in the intra-bank network, in the payments flow. Most open bank providers are not. They have to wait around to be able to get the money, but Trustly knows when the money is coming to them, basically. But now, I spoke to a few of my colleagues who've gone to Vine, obviously a newer, more smaller open banking provider, and from the time that actually the guy told me about what he was trying to do to the time he actually set it up, it was well within 3 months of actually that process itself. Right? Because I think the UK generally, they do encourage those things. And I think they are trying to sell that open banking benefit a lot more now, because it does hopefully have the benefit to the end consumers. Not yet. I think there's definitely the work to be done there. But the point is, I think the FCA especially and the UK Treasury are trying to say that it has benefits for the end consumer. What do we do in encouraging the providers and the players to then help out? And that's why they've been quite friendly in that way.
Fresh, you've historically avoided the US because from like a regulatory perspective, it's just an absolute nightmare to go
It's
to.
impossible. I mean, if you're self-funded, we're self-funded, right? So we've never had someone come and give us buckets of cash. But otherwise, like, you know, for every state you need a license bar, I think one. And the whole process of then you have to have feet on the ground, you have to set up a proper office, you have to like wait a year and obviously pay all those people's salaries. It's, and that's just one state.
Yeah, we definitely learned the hard way. We typically partner, try and test a method, certainly TransferWise or Wise have done this. You partner with a US bank, use their banking charters that operate, whilst if you want to, you spend the next 2 to 3 years getting licenses on a state-by-state basis. So the cost of about $2 million to actually get all those licenses. But we learned the hard way of setting up a team. We went too early, too soon, and really validated the market. It's a mistake, but
Yeah. So there's Cross Rivers Bank. I don't know
Yeah.
if you yeah. So Cross Rivers has done a lot for that. As in, people like us who partner with Cross Rivers, you do need to have some base on the ground for them to service you. But they're in a lot of trouble at the moment. I think.
yeah, I think they're also famously partnered with Railbank as well.
Yeah.
Rails are
To be honest, I think check out as well actually, and I think generally speaking, they are the FinTech's preferred bank in the US, because in terms of how they view FinTech globally. So I think it's the case where when I used to work with them at Checkout, it was a case of I think educating them, because there was actually I think the guys who are from the US will probably know this. It's very much a big market just in itself, right? If you look at Europe for generally, there's so many different countries across the border that have very, very different types of things, right? But you're just such a big market that they haven't had to work or concentrate on anything else apart from the US in itself. So we've had to, when I used to work with them, and Revenue was the first customer who tried to go to the US, and we obviously were partnering with National Bank, CRB. It was trying to educate them in terms of what we're trying to do to educate the risk process. And I think trying to work out a way of how do you mitigate and balance that risk across River and payment provider as well. But I think they were the first one who were willing to do that. So I was a part of WorldPay, which then merged with Vantiv in the US and now with FIS. And the larger incumbents were very difficult in terms of actually understanding what the newer things was, and were trying to let's try newer things. But Portugal was definitely a lot more open to that, I would say. And that's why they're their preferred partner.
I think it's also the viability of payments infrastructure in the US, because open banking here, super cheap as well. I think that's the key message. But one thing that we've certainly learned, again, to our detriment in the US, is if you use a wire transfer, that's $25 in and $25 out. So you have to be doing a high value transaction, otherwise it's just already underwater from it. ACH, their version of faster payments is a 90-day clawback. Again, there's just all this risk associated with it, it's just not easy.
And I think I saw a few things last year, they basically posted $18 trillion worth of checks. I don't think I haven't seen a check for a while now. Actually, that's still very much prominent. Right?
75% of the world's check volume is US.
Yeah, it's crazy in terms of. But then I saw obviously Trustly is obviously operating in the US as well. But and the model there is very different. Over here in the UK and Europe, generally is top down. It's been because of regulators, open banking has come about. But in the US, it's bottom up. It's the market demand actually is trying to. So there's no real framework for anyone to adhere to. It's whatever you think is the right way for the consumers that you have over there. And that's been very fragmented, I would say. So there's a few providers like us and a few of the US providers who are trying to do that. But I think with the new Dodd-Frank regulation that's going to come in, I think they will have something what's similar to the UK or which is top down, have some form of a framework that they can work around, rather than at the moment it being very free for all.
18 years with zero external funding is
Hard work.
hard work, I imagine, but also that obviously benefits to both.
Yeah.
We've seen a lot of companies die by the wayside during that time. How have you navigated some of the pretty toughest environmental, economic environments over the last 20 years?
I definitely think being able to make your own decisions and not being influenced by external factors, etc., and being able to make the right decisions based on your customers and moving in that direction is definitely helped. Being able to pull back when you think that there's when you think that there's going to be a recession, or there was almost, or there has been, and doing those sort of things with your own decisions and your own decision making has really helped. But it hasn't been easy at all. We've had many a time when I thought, oh God, this is a really troubled moment in our business, and somehow you just have the determination and willpower to just fight through it.
You weren't tempted to take on any financing at any point?
No, when we started, the idea of FinTech didn't even exist. And when we launched ZenPay, which was in 2011, so prior to TransferWise, we did actually go and meet some VCs in Silicon Valley, and we had some good meetings. But then they were just actually we're not convinced. And then a year later, they're all investing in TransferWise. So
Just the way.
sorry. So I was just because we were in a row. So
You maybe missed the wave of investment there. It's certainly what's, again, coming from a company that's we're going through our Series B financing at the moment, as we've had multiple stages. It's all changed. There's A plus and pre-seed and everything now, so no one actually has an idea of exactly how many stages you have financing nowadays. But what's definitely changed in FinTech is you've had such an abundance of financing available for FinTechs over the last few years. In the last 12 months, that's just completely frozen up. All those lovely valuations that buy now pay later funds were getting, from tiny revenues to billion-dollar valuations, is completely under scrutiny now. And actually, the focus on unit economics of actually having what is your path to profitability, I personally think is actually such a great focus and lens now that all FinTechs and startups have to actually be having decent governance and actually going in the right direction. Rather than we're going to be loss making for the next 20 years. Amazon, I think, if Amazon launched now, I don't think it would have done as well, as you can't be loss making for 20 years and still be a trillion or million, but multiple billions company.
It's a really, I find it a very difficult concept to kind of understand, just because, and this might be my naivety or anything like that, but over the last probably 5-6 years, I've got it into my head now that anything that we do, anything new that we launch, we should shout from the tops of the rooftops about it, and really we make out like it's the next biggest thing, even if we think it's just not massive development, because that's all they've done. They've literally done something that we've probably been doing already, and when they've done it in the past, I've looked at it going, what's the big deal? Why are they, But then they're all over the press, and these investors are going, wow, did you know? I've gone to events and they're going, did you know that these guys do this? I'm like, we've been doing it for a few years now. But
we definitely took the approach that raising money isn't a noteworthy event. It's what you do with that money, or actually the result of the money, that's actually noteworthy. So we're like, companies raised 30 million in a Series A, great, but what are you doing with it? What have you shown? What's your results from that? Have you gone to a new country? Have you landed the biggest clients in the UK? That's actually noteworthy. So it's very easy just to swamp a market with news when it's actually not relevant.
How have you found in terms of compared to your Series A and what you're doing with Series B right now? Have you found there's a lot more scrutiny in terms of what they're trying to do? Is that it's been a lot longer process for you guys?
The due diligence is pretty intense, as obviously there's more rounds you go through. But now it's pure focus on execution and unit economics. So what's your recurring revenue? What's your net recurring revenue through expansion, MRR, all these metrics. When Series A, you see, oh, do you have a great idea? Yes, tick, great, here's money. And it's actually now, it's purely execution, it doesn't matter what your idea is anymore. It's like, what numbers do you say you're going to do? Did you hit them? Great, that's it. So yeah, it's actually a completely different ballgame.
I think like so. Actually, when I was at checkout, I think it was one of the boom years for payments in general. I think the Series D valuation was like 40 billion and 1 billion their base. And I still remember what VCs used to tell us, like, let's throw more bodies at the problem. Like, but we haven't fixed the problem. But literally there, it used to be that way in terms of let's just throw more people at the problem. We don't care if the problem is fixed, but at least there's more people to be able to look after the problem itself, right? So clearly, I wasn't surprised in terms of, sadly, and that's why I think like the governments around that needs to be a lot more scrutinized. I think in terms of people do end up losing jobs, right? You look at LinkedIn right now in terms of how many people are looking for those type of things because they've been victim of those things. Because like I remember I checked out like in terms of the early stages, like people were hired not just for the role at the moment, but for the future. And when this type of things happen, so in a way, I think it's a good thing. It's almost a reset. I think for people to think twice. So that way, people like us, I guess, people like the employees don't get impacted by it because they're the ones who probably feel a lot of the burden, right, in terms of what that could be if when things go wrong. So I think it's definitely the right way to go, I would say.
One of the interesting, certainly developments over the last few years is the FCA's involvement with payments companies. I think it's probably fair to say that if you wanted to start a payments company, a relatively low bar, still yes, there are boxes you have to tick. But I think when all the payments companies were under pressure during COVID, the scrutiny now involved means that people who are still in business as a payments company have really, there's proper governance and compliance behind it. It's not just saying,
there's a number of companies that are under 166 at the moment. It's public knowledge, but there's a number of companies that are actually being investigated at the moment, which is a really costly affair if that happens to the FCA. But that just shows that they are very much on it now in the UK.
you can see the impact of banking as a service, buy now, pay later, as in those companies now are under a lot more pressure because it was very easy to start up, but not as easy to keep going.
If you don't mind, can we just pause for a few minutes and take some couple of questions?
Please, absolutely.
Well, I have. So as more and more countries are deciding now to set up their digital currency, like U.S., they just hired a chief architect from United Healthcare.
Can you introduce yourself?
Oh, sorry.
No worries.
All right. But how do you see these, all of these digital currencies that national governments are going to set up? Because there's a lot of sovereignty that goes into that. You've got places like Estonia, which has worked out great, right? I mean, Estonia is like the poster child for how do you convert everybody just to do business right here. Right? And the best way is, it takes me 3 minutes to do my taxes. Oh, yeah, I'll do that. Right? But yeah, so how do you see these digital currencies kind of? Do you see it as a possible hindrance, or do you think it's going to accelerate the open banking?
I think it's a good thing, right? And you only have to look at, I think a few years ago, the Bank of England brought out this stat which said, out of all the money, sterling pound that's in circulation, only 20% is out there, 80% is hoarded, right? So you look at that metric and say, what people do with the pound itself, right? So I think it was inevitable that some form of digital currency is going to be out there. Now, I think the main benefit that obviously blockchain used to provide was the not having any control over the government when you interface, right? So that you do lose that. But in terms of how well we are going to the digitized space now, in terms of how easy that makes, yeah, you do give up some of the cons around actually governments would love to be able to look into your bank account to see, have you paid the taxes over here? Because if they know what you have, they can easily tax you what you don't have. You need to do, right? I think in that respect, I think it's a good thing in terms of what that would do like. But yeah, there is that part of focus you lose around, that means my government will always have a tap on me. They will always know what I'm doing. So you do lose that. So I don't think you can have one thing without the other. That will have to come. But in general, for me personally, obviously, me being biased, being in the gaming industry for a while now, and how convenient it has been with everything that we do in the tech side of things, I think it is a good thing in terms of governments looking into these things. I think there's been a report that the UK Treasury and the FCA are actively looking into pound sterling as a CBDC basically. So I think generally it will provide more benefits than what it will take away from actual concept.
I think it did say about 5 years ago for the UK to adopt a stablecoin themselves.
I was just going to say I would love for it to be regulated. I don't think the people that currently use it would love for it to be regulated. But I would massively happily say, yeah, great, because it would mean that we can enter that market. Because as it stands, the regulator probably doesn't care as much, but our banks won't let us touch crypto, won't let us go anywhere near it. So, not just like us, but many other providers. There are some companies that do not crypto exchange, but they do on-off ramps for crypto providers and things like that. They're getting debanked left, right, and centre. They have to have. I spoke with a company that I won't say the name because it's not fair. They told me openly that they have a team that go around getting new banks all the time because they don't know when a bank's going to offboard them, so they need to have another one ready, which is madness. You can't run your business like that.
I think certainly with our experience, and apologies for the lawyers in the room, is bankers and lawyers, they love to be first to be second. As in, you've seen a lot of banks who want to dabble in, or certainly have dabbled in crypto, have pulled back massively from it. But having that legitimacy, I think to your point, I think UK might actually be backwards, but it's progression in payments that might actually be holding it back from adopting this, because FCA is very understandably risk averse from new technologies, new products. It's saying, talking about your phone up, being able to do everything with your phone. That's where emerging economies have probably a much better chance. I think the stat was that the country with the largest amount of second-hand smartphones is Vietnam. And if you bypass infrastructure hurdles, you can actually leapfrog and go straight into a new area. So I think those countries, like, as you said, Estonia, have a better chance of adopting this first. I don't think the FCA is ready to do this yet. But certainly, as you said, the banks aren't as well.
Or they don't have the resources. Yeah.
But you're right, there's a lot of companies that would, I think everyone would benefit from legitimacy and regulation, certainly with an FCA stamp of approval in crypto, because everyone wants to be able to use it, but no one's willing to do it yet.
I don't think it's a bad thing banks are doing that, because I think people who end up losing a lot of the money are the ones who probably don't know enough about the risks attached to it, right? So I don't think it's a bad thing that the banks are doing that, but I think it's the case where for a lot of people, probably, and that would be the smaller section of the population who are obviously know these things, they would feel hard done by. Because they kind of, why is my bank telling me what I can spend my money on and what not? And I get that. But I bet like the majority of the people who do end up losing money are the ones who don't know the risk attached to it. So I think, like you mentioned, the banks do have a responsibility in terms of that trustworthy and to be able to make sure that their consumers are protected, their customers are protected, albeit the ones who obviously are truly involved with how it works, they will feel hard done by because of the fact that they feel like, why should my bank tell me where I can spend my money and where I can't?
Yeah, and maybe if I can just make a point in addition to what you said on trust. And this is a forum where we talk about how industries like FinTech can impact a billion lives. And it's all very good when you talk about digitization, getting second-hand phones. This was an example of how developing countries and the people on the lowest level strata of society, how they can benefit from that. But at the same time, they are the most vulnerable. And I firmly believe that the industry has not done enough to protect fraud and protect these vulnerable sections of society for them to build the trust to use these technologies a lot more. And we see these issues around fraud and people losing their life savings and all of that. So would love to hear the panel address that and what as an industry, and forget FCA, when FCA is doing their job and so on and so forth. But I don't think the industry has come together to protect the people, really protect the people. Whether it's education, whether it's building technologies that don't lead to these frauds. And it's all good to say that consumers should understand the risk. But they don't. When somebody is illiterate, how do they understand the risk?
I would like to say, I mean, we're massively scrutinised, to be honest. So, we are ourselves at risk of cyber security threats, all the time. And from like massive ones to stupid ones where they just hack our text messaging. I don't know if you've had that, and they just send tons and tons of text messages, and obviously we have to pay for those. Two, consumers that are risk of, like you said, of fraud. We have to do all the right checks and ensure, to the point where we actually stop payments and call the client and tell them to verify, saying, "Are you sure you want to send money here?"
Correct.
And if we've got literally tens of thousands of payments going through, our system has to be good enough, which it is, to create those alerts. But then we need the team behind them to get through those alerts quick enough, etc. But if we don't do any of that, we'll get debanked.
When this is related, but the segue in terms of mobile phones, we're race to get to the smallest mobile phone, and then everyone's just started doing bigger and bigger mobile phones. There's a race to get to as quickly as you can make a payment, a straight through payment. But now, I think with everything that's coming into play in terms of strong customer authentication, the PSD2 regulations, there's actually a lot of banks, a lot of payment providers are introducing friction into the payments now to go like, are you actually sure you want to do this? If someone wants to make a bank transfer, it's like, is this good or service? Do you actually know what you're doing? Is this an investment? There's so much more friction now just to make a payment. So I know you said ignore the FCA, but I know it tends to always have let's call it not a best view on them. But what they're doing now with the consumer duty that's coming in this year is actually really hammering down the focus on, is the end user disadvantaged or not by this? And that definitely has changed the focus from the payments industry on, are we just ticking a box, are we okay, to actually, is the end user disadvantaged by this? And I think that's such a great step.
Yeah, I think it is. And I think the point I was trying to make is, like, why does it have to be an FCA to pull it down? Why can't the industry come together and say that we will do this, we'll protect it?
There are industry bodies
Okay.
at the moment, like AFEP, for example, that are there to come together and put, come and talk about any kinds of new frauds that are happening in the market, things like that, and try and find ways of tackling them and sharing details and news between the companies to try and make things better.
Good.
So
If you actually compare it to, your yesteryear bankers, right? I mean, when we were kind of still coming out of colleges, we were sold ULIPs, we were sold 3-in-1 accounts. When all we needed was a savings account, you were actually asked to buy a demat account and a trading account, on the back of which 25 quid was charged as a maintenance fee. So I think I would actually kind of say that the fintechs in the last 5 to 10 years have probably done a lot more towards consumer education. Today, I think I know what I need to buy, thanks to the technology that is in the place where I actually spend most of my time, which is my phone, rather than me having to spend time trying to reach out to somebody saying, hey, what is investments, what is insurance, right? So I think I would probably say, yes, of course, there is a long way to go, but I think we've come a long way.
Is there any data where we can access to say that, okay, post the advent of FinTech, frauds have actually come down vis-a-vis what it was earlier?
I think we need to index it. If you just look at it by the number of frauds, I think it will not necessarily give you the right picture. I think if you kind of index it against
BIS has some really good historic data on
BIS.
that. Yeah, BIS. I mean, at the end of the day, if it's a banking transaction, it goes through them, and they're really good at following up on any of these fraud points. And so, from an insurance point of view, it's kind of like there are golden nuggets in there. You got to dig. There's nothing easy about it, but I think they are looking at this. And to your point, the fintechs actually score way higher than brick and mortar financials. And coming from the U.S., right, we had our friends Wells Fargo, right, who just got blown up because they were selling college kids, $25 a month accounts. Oh, and you need to have the savings account. Oh, and you need to have the brokerage account. Before you know it, you got some kid who's making $12 an hour, paying $100 a month just in bank fees.
But there's also another view that maybe it's not efficient for the industry body to regulate itself. It's first of all conflict of interest. You'll always try to put the economic benefit below your these risks and all. Secondly, the data from a data perspective, countries that are regulated from top down have done better than the industry regulating themselves. For example, US is essentially an industry regulated and standard setting economy. That's why though it's the biggest market, no doubt about it, the infrastructure is not that great from a banking fintech perspective. And if you see Europe and say India, it's very much top down, where directives and so they're done pretty well for the common people. I'm not talking just fraud per se, but giving the benefit to the customer, which includes on the positive side many innovation, negative side there is the frauds and all. But overall, if you see a centralized regulation is more beneficial. And not to say that it cannot happen, but I don't know of any economy that has self-regulation and done that. And I believe fundamentally there's a conflict of interest there.
So hi, this is Pratap from ICICI. I think I would tend to agree with him in terms of when a regulator like FCA, which is not very prescriptive in nature, people try and rely onto the ecosystem, try and innovate, and when they innovate, actually there are chances that they might forgot the guardrail either by choice or by design. While when it is being a little more prescriptive, at least we have seen the people in general are protected in terms of, especially the retail side of the client are more productive. And I don't think in terms of if we look at a place like India wherein 100 unicorns are being born, so I don't think it has put up as much of restriction on the innovation. Innovations are also moving at the equally fast pace, but we look at in terms of the way consultative papers keeps coming from FCA. Every 3 months there is a paper, and that is because the whole ecosystem is such that you don't want to be prescriptive. You allow people to deviate, ensure that the cancerous things grows up, and then you want to cut it down. I mean, otherwise, if you have at least little guardrails in place, people will not deviate. At least, key framework you keep. Rest allow people to have the flexibility to do the innovation and roam around in terms of.
Yeah, definitely got to be able to promote the innovation. Certainly, if you're trying to again I would say at the beginning, trying to make the UK attractive for fintechs. So what we found is regulatory change is a huge impetus, certainly for banks. I know confirmation of payee has done a lot to help with fraud. As I mentioned, again, every time you go to your bank account, it's hopefully a green tick every time you put the details in for push payment fraud. That's a huge mitigant. So I think when they have that collective incentive to change, they normally do quite quickly. But I know that we were speaking earlier, working with banks, working with large incumbents can be a frustrating and slow process because unless there's a reason to change, they just would rather pay the fine, pay for the mistake rather than actually make the change. Parts of the funds still won't count. Here you go. Sorry, I'll just make it good rather than actually putting something in place to stop that happening in the first place.
And that's the banks over the fintech.
Yes.
Just to be clear, it's the banks that can pay the big fine, not us.
But I just wanted to ask a question, not an industry expert at all, but as you said about banks can pay that. We know that there are banks that the government will not let them fail, for example, or collapse. Is that a same scenario with the fintech? Are they going to reach there? Is that ever a possibility, or is just because it's so technology driven, that's not something that's possible at all?
Can a fintech fail, or will they not allow them?
Will they reach a certain level like big banks where the government, taxpayers and politics will all get involved?
I think Revolut's valuation was more than RBS, wasn't it?
Yes, it was.
Wasn't it? Yeah. But whether a government would get involved to stop it from falling over, I'm not sure. They released their latest figures just recently saying that they actually made a profit. But I think, was it 2/3 of it was from crypto?
Yeah.
There's no way to validate that.
The auditor actually said that. The auditor actually said, actually 2/3 was crypto, but we can't be 100% sure where this has come from. That was the bottom line from the auditor.
So is it less political capital in trying to show that, okay, we'll save a fintech than perhaps a bank, right?
Possibly at the moment, I would say so, right?
Yeah.
But what that
Is that going to change? That's what.
I think at the moment there's still a more of a bigger reliance on banks,
Hmm.
right? Like you mentioned, I think most of us salaries get paid in our banks rather than new banks. But that probably will change one day, right? If you look at the younger generation, so eventually there probably will have to be a point of actually is this fintech too big to actually collapse now? And what will happen if it does? Like you look at WorldPay, and obviously this was a few years ago, right? The WorldPay UK market share was around 45%. So imagine if WorldPay went down on any given day in the UK, people would not be able to make a payment, right? But there was a case of actually working alongside the bank to be able to do those things. But I don't think we're at the place just yet where that would probably happen.
The closest
I
that
think-
came was Wirecard, right?
Sorry. Yeah.
Wirecard.
Yeah.
Yeah, I don't think they would be. I mean, I don't think that if it was. Let's just take Revolut as an example. I'm not sure it would be saved by the government. Mainly because of a few reasons. One, it's obviously a loss-making company after last year.
No, I think the other reason which I would tend to agree that they will not be as much supportive to the fintech than to the bank, because bank, if you look at, people generally put up their lifetime savings there.
Yeah.
Why Revolut will always be a secondary bank? I'm just taking that example.
Yeah.
So when till such time fintech becomes the
Right.
primary
Mainstay.
bank, and the people's livelihood is at stake and the savings are at stake, government will have lesser interest to protect a fintech compared to a bank. I mean, that's my view. Unless
Makes
maybe-
sense. Yeah. I mean, I was about to say the same thing. I mean, for Lehman and all, I mean, the liability side was source of funds. So if an investor loses money, it's okay. But when somebody who's put
Like
up
savings.
deposits, savings,
Yeah.
if he's going to lose, the political power is going to fall down, and I mean, they lose their stint, or so that's where I think the political will, capital, taxpayer money will come in. If you're just a payment facilitator or an aggregator or some technological innovation, fair, you're respected, you're bringing synergies, efficiencies, but unless there is some bit of savings, as was mentioned out, where people will actually go and cause a run on the bank or somebody, I mean, there'll be social upheaval.
I mean, we've seen fintechs that have raised hundreds of millions of pounds, which are currently going to the wall. They're not being saved.
Yeah, I mean, that's all investor money, so
They're
it's
not being
okay.
saved
People,
by anyone.
investors lose money, it's okay.
But that's why you see a lot of payment companies don't actually avoid getting their banking regulation, because under the PRA you're going to have the same scrutiny that you have for any other bank. So that's typically when payments companies slow down, is when they get a banking license. As in everyone gets, like, we're very nimble and startup-y. Yes, you can make a lovely user interface, but get a banking regulation, and then you've got to have your tier 1 capital. You've got to have the same requirements that any other bank has, and that's when things change.
Hello, my name is Yar Mohammed. I'm co-founder and CEO of Cube Innovation. We are building open banking driven credit score in London market. I'm ex-banker. Actually, we have been following open banking for last 4 to 5 years. Very interesting. I'm very curious to know. You may have heard the name of Ideal of Netherlands, A2A platform. You may have heard the name of Blik of Poland. Both they are A2A platforms founded at 7 to 8 years back. They control 80% of the entire payment of the market, beating the card payment. London, UK, being pioneered in the open banking, still card rules here. So, as you all, the panelists all are from the payment background, you might have better insights than we have. What is the main reasons? Is it something like, because I was ex-banker, I had the opportunity of leading the wallet and the building the card business. It is something like that. The reason it is not taken to the next level in the sort of payment in the UK, is there any lack of proper incentive for the banks so that they are pushing the card still, because card issuer still gets money, right? Or should the fintech like Fastly or Go Cardless think about the pricing model so that there's a proper incentive to the banks? Because end of the day, we all know that merchants should love it, right? You are paying 3% to the MX or CD, or I mean the Visa or MasterCard. Even if you charge 1%, still merchants should adopt the payment method, right? Frequently and more aggressively. And e-commerce market in UK is really, really big. So why isn't it happening? Still the cards rule over the bank payment.
So from my perspective, please add in, is what I mentioned earlier is that the use of proliferation of cards in certain countries actually impacts on what the underlying infrastructure is going to be used as well. So as I said, if you don't use cards in the Netherlands, then using Ideal or using another payments provider, open banking is going to be far more dominant than anybody else. In Scandinavia is one of the most, as it's got probably the most advanced payments infrastructure out there. So having cards is much slower and obviously much higher cost. You're just going to avoid using them. And I think that's where you've seen MasterCard and Visa try to branch into the space by having Visa Direct and MasterCard Send. They're trying to bring in their own account-to-account plus. That was the HOA you mentioned. To, again, diversify because they can't rely on that. So again, I think it's down, from my perspective, it's down to how much cards actually a mainstream payment method or not.
No, it's right. I think that's one of the things. I think it's the case with the UK, right? And if you look at like cards when they first started, credit cards was basically the main outlay in terms of the people, right? So people were already into the credit card thing, but like I mentioned, like in Europe, taking a credit is like not the most common thing to do. You don't want to take credit, right? I think in Germany, people tend to like rent for like 50, 60, 70 years rather than buying a house because they don't want that type of debt against their name. And I think it's the case where in the UK it was different. The card was already much into the payment for already. People were very much used to it, right, in terms of what they could do and what they couldn't do. But at the same time also in terms of when the open banking payment came about in the UK, I think it was the case where in parts of Europe, trusting is very big in the Nordic countries, right? And Nordic countries is predominantly very much like bank transfers, open banking is used. But the regulators there and the banking authorities work very much in terms of trying to educate the mass consumers in terms of the benefits of it. So one of the problems that we have and one of the challenges that we have in the UK is the education is not there, right? In terms of how do we go about educating the end consumers like us to be able to use open banking rather than the card, right? And I think for most merchants, because in the UK card is still very popular, and for most merchants, they almost feel like, yeah, I know open banking reduces my fees, but there's a risk of a consumer going there not knowing what to do. It's so new for people. So I rather pay the fees and have a transaction go through than risk not it going through at all. Because like if you look at most of the people who tend to use open banking, there's only 6 million compared to one card, right? So there's a risk of, oh, actually, what if I do just push open banking and they go through and don't know what to do, I'll lose the whole sale. I'd rather not do that just yet. I'd rather have the card that people are more comfortable with, but know about that a lot more, and absolutely pay the fees that they have, than risk losing what we have. And that's why the education consumer bit is predominantly what we talk about with our customers. Like I think we're trying to find ways of how do we educate a mass market, which is impossible, right? So we're looking at different ways of how do we target the end consumers of our customers, the likes of Wise, actually Play, all these things. How do we now find a way of targeting these pockets of consumers to say, look, actually, give open banking a try. Whatever it is, the different incentives, whatever it may be, that's one of the reasons we're trying to think of. Because I think until the end consumers are educated, it becomes very difficult for cards to lose this foothold, I would say.
And Anish, from your experience in the open banking space, the way I kind of think about it, contactless near field is a form factor making the payment happen. So are there open banking players who kind of look at making contactless payments possible along with the A2A?
So
or QR code or whatever.
There is the QR code piece, right? That is still very cumbersome, right? People on cards, I don't know how. I probably pay most things with my phone now, right? The convenience of just going there paying rather than having to do anything else. So, but as soon as you add the QR code, which you can do, and then scan the QR code, then go through the whole online journey, and then go to the bank, that is there. But how cumbersome it could be, right?
What about tap and pay?
At the moment, no. At the moment, you have to be able to do the QR code thing, and to be able to do that. And that's like tap and pay. I think even further down for me, right? If you even look at recurring transactions, the sense of VRP, so the variable recurring payments and banking, that's let them take it off because unless you are a bank or regulated body, you can't use that or offer that. So there's a long way to go in terms of trying to pitch open banking against cards, I would say. I think for us right now, we're not trying to pitch you against cards, we want to work alongside the card because we're not at the place yet where we think we can overtake the cards anytime soon because of the consumer education piece, because of the fact that people are a lot more used to using cards in the UK, especially as well. So I think there's a lot of work that needs to happen there before cards do end up being overthrown, I would say.
Yeah, no, please continue.
I am absolutely a consumer because I'm a journalist and I don't know anything about and so I'm trying very hard to follow you. So you have taken me from a bank to a card now to a bank which doesn't have a face like Starlink or Monzo where I do have and I'm very scared and I need to know what security are they covered by ombudsman or do they have any. Now you're asking me for open banking. Where I don't even have a card. So no touch and feel. What is the security in all of this? And where does a customer get that feeling of no tangibility at all anywhere? But what is the security jacket in which you are?
And it's a valid question, right? Because I think most of the people in this country would be like you. And I always use my wife as an example, right? Because
I mean, I don't even have money on the Apple Wallet.
because that's all linked to your card, right? Which is linked to your bank. I think
Yes.
I use this example of my wife quite a lot. She's a teacher, right? In terms of her technology part of things, it's very much naive in terms of what it could be compared to me being in the industry for all these years now. So most of the people in this country would be like yourselves, like my wife, who haven't understood what open banking is. I think the main thing that open banking does, in the most simplistic form, is you're actually using your bank account. Right? That's the most simplistic way. Is you're opening up your bank account to actually process the transaction, rather than you using a card where you enter your card number, all the expiry date, all those sort of things. You're not doing that. When you go and pay for this microphone online, it will say, yeah, pay right now. When you click pay, it actually opens up your online banking app on your phone. And then however you then...
Very much like Amex works.
Yes, and wherever you go through it, however you authenticate yourself on your mobile open banking, on your mobile banking app.
Right.
So I use NatWest, I use authenticate my face or computer, whatever it may be. So you go to that, and when you go to there, you say, you're trying to buy 10 pounds worth of microphone. Is that you? Yes, that's it. So that's the thing that open banking does and that's the education piece, right? It is that security that you're using your bank to actually make a transaction, but people don't know about that. People think there's an additional thing that you have to do in order to make a payment, but it's actually not. You are actually using a trusted bank and you're doing everything on your banking app. You're authenticating however you use your banking app. You're basically going on to confirm to the payment and that transaction is processed in that way. But it's that education piece that is lacking. And that's why I think for us, we struggle with that now because obviously being in the open banking industry, we're trying to find ways of how do you then penetrate. And even though we sell open banking to all these customers that we want to work with, all these large enterprises, until the end consumer is aware, they are encouraged to go and use open banking, it won't be as...
But also at the same
finance
time,
still needs social sciences.
No, I was going to say at the same time, there's more of the benefit is for the receiver of the money than the sender of the money, isn't it? So if
I guess fraud, you could say like it's less fraud, right? You haven't got a card because most fraud is related to card transactions, right?
Yeah.
So no one can nick your card, no one can steal your card and then make a fraudulent thing. So that is there, but again, it's an education piece, right? Why would you know?
But how would you go and buy it in a shop?
No, so it's
You can't, it's
no.
all online.
That's the moment of time. It's very much an online piece, and again, it's the case where there's no convenience, right? Even when you buy anything online or anything on the shop's floor, at the moment you can just tap your card, walk out, right? Or if you're in an Amazon store, you don't have to do that. Right?
So by a couple of joiners, actually there are payment services who offer QR code and pay through open banking.
Yeah.
Secondly, you did say it's an education, big deal, definitely. But one of the claims that Amex and other networks have is that we give additional services for which they charge, which is the chargebacks and all. In open banking, I mean, even though I'm a big fan, I was in the committee and all, that's a different thing. But what happens? Who takes the bigger risk for chargeback?
So at the moment, the whole point is there's no chargebacks, right? Because you're authenticating it, so basically the risk.
So the question, doesn't it comes that security? This element of security is, what is security by the way? Is it just ID theft and all, or is it the peace of mind that if something bad happens, as you said, there is a phase that can protect you? So that, who's that phase or who's that entity? I think maybe that is missing. I was always wish there is an escrow for
It's the
open
same
banking or
as-
something.
I guess
where
it's
you-
the same as doing a bank transfer, right? So
Yeah.
if you go to your own account and do a bank transfer, or you end up going on a site and using open banking, the risk of fraud is the same in both situations. It's not elevated because you're using open banking. It's the same.
No, no, okay, as I said, I'm also on the panel of APP and FC and the authorized push payments issues and all. I'm not debating that. What I'm saying is there's a perception.
Yeah.
Okay, so, and it's also a bit of reality is also there because chargeback, even though I'm not saying they cover all the aspect of security or, thing, but this element is missing so far. Okay, I'm not saying, it needs to be there and all, but from from an end user perspective, the way they sell credit cards and debit card is this: if anything happens, don't worry, we are there. Okay. How much they help, that's a different issue. It's a big fight to take anything back. That's a different issue altogether. But that statement is at least there, which people think, oh, okay, fine, I'll get a credit card. So this statement, if it comes along with the open banking, I think that perhaps might address the security issues, etc. Which today I don't see it happening. That's why it will be actually it's a question: is there anything happening like that?
And I think beyond that, it's not just about just about substitution of the card. I think that business benefit needs to be sold to the end user. That what extra am I getting by actually adopting open banking? So if it's just replacing the card, I think that's not a good enough benefit for the user because instead of the card now you're just using open banking, but you still have to kind of put in your credentials, etc. So I don't think that the convenience factor is that different. So you need to build in some other differentiation which open banking will bring in terms of value-added services that could be provided and so on. So that needs to happen.
People will still use credit cards because it provides that protection if something goes wrong. And that's where if I use a debit card or open banking, it's like, well, money's gone now. Yes, I clicked yes, and I'm happy. But if it's, let's take travel. The travel industry hasn't that only worked out to get consumers their money back because they were typically using credit cards. But to the lady's point earlier in terms of it's about, I always find that fintechs not oversell, but overemphasize their credibility and their legitimacy because we don't have the trust currency that all the banks do. So having the protection of FSCS in terms of up to your first 85,000 is protected regardless of what happens. Banks have that, but so does every fintech bank has that as well. I think it's just we always have to go to the extra level of certainly from a Shieldbase perspective, working with law firms in multi-million M&A deals, putting all funds into insolvency protected accounts doesn't have to have that security around it. But you don't ask Barclays what account is it going to. You're just like, no, paying with Barclays is going to be safe. Barclays actually, banks have a lot more ability of what they can actually do with funds than startups. Startups just like, we're not touching funds because we have to build up our brand credibility. So I think we do go to the extra level just to say that this is safe and these are the 5 reasons why.
My name is Vijay Noy. I work with Secure Mobile Intelligence. We use mobile subscriber data to authenticate customers before any online transaction. So one of the questions I had was, in certain markets, I'm not just talking UK, but fintechs again are agile. They work across borders. So in certain markets, you have a banked population, and then you have an unbanked population. Of legitimate earning people, but probably they don't qualify for bank accounts. So typically, if you see certain markets, there's 38-35% of people that are unbanked, and that's where fintechs with their services go in, and they're able to then, monetize or bring these people, financially include them. So in this case, there's this question of agility versus, doing checks on many of these bank account holders. So how is it that you balance out risk versus agility? Because you do need to get those customers in, those account holders in, to be able to financially include them and bring them into the financial system. So how is it that you balance these two, and de-risk against potentially bad debts?
I'm not interested. I'm not interested in that market, so I can't really answer.
Okay.
Well, I'm going to answer a bit in terms of, so I don't know if you heard of a company called Tala, right, in terms of obviously what they do and the services they provide, especially for the unbanked population globally, right? I think it's the case where for them to be able to work in the likes of India, Indonesia, Kenya, all these markets basically where it's majority unbanked, they were heavily encouraged by the governments or regulators there to be able to actually come in to set something up there that allowed those unbanked population to be able to use their services, right? And I do see that in terms of when we were at WorldPay's World, and I think I heard about check about actually when we were trying to go to India in terms of our licenses and all those sort of things, we weren't targeting that level of consumers, right? In terms of the unbanked population, I think it's the case where there has to be some form of understanding between the governments that I saw with Tala and the regulators, whoever that may be, that were heavily encouraging the companies like Tala to be able to offer those services there and give them benefits that they probably would not give a different provider who wasn't targeting the unbanked population. Right? And that was the key element for them, how they started off in, I think it was Vietnam, Indonesia, and that type of countries where it was predominantly unbanked than the other end, basically. So that's why I think one of the key reasons I would say in terms of how you can balance that is how friendly or how willing are the governments, regulators in those parts of the world willing to open themselves up to help the section of the population that probably is underserved, but can be a very, very good use of whatever it may be, tax or whatever it may be. But how do you go about doing that? And that was definitely the way that they definitely helped Tala out in the early days.
Yeah.
Just very conscious of time. I think
Just another last question. One more question. Yeah, say something.
Yeah. So, we've actually worked with a few. You mentioned a couple of markets like Indonesia and Vietnam. So one of the things that we noticed is that the mobile service forms a really good base for data, and where there is the absence of bureau data or various other forms of data, mobile operator data, it could be a prepaid or it could be a postpaid form of subscriber subscription that they have. But mobile operator data mobile industry is a highly regulated industry. So a lot of data, a lot of information that's available forms a very good predicator onto which to base this check on. So a number of fintechs that we are aware of, microfinancing, microleasing, etc. companies are operating and growing in places like Indonesia, India, who leverage this data and then are able to grow. I mean, that's what we found in the last few.
We have look at Kenya, right, with M-Pesa, right, in terms of how that's being rolled, right, and it is predominantly to serve that underbanked population where everyone has a mobile phone rather than a bank account, and I think there's been a lot of interest from literally like Mark Zuckerberg, Bill Gates, all going to Kenya to learn about how have they actually created this, how have they actually done this, right, and it really has worked for the population there. So I think it's definitely the case of, and again, that was the thing, I was listening to the CEO of M-Pesa on FinTech Insider like only a few weeks ago, and he was saying the government there in terms of what they were trying to do for the world so much more opening and friendly in terms of what they wanted to do, that they were willing to work with that. But I think many of the governments that may not be thinking that way in terms of how do you help the underserved.
One last question.
Yeah, sure. Good.
Yeah. So hi, my name is Nakul. I'm the co-founder of CrowdInvest. It's a investment platform, or you can say crowdfunding platform, which is allowing investors to diversify into different economies their portfolio. We're currently regulated in UK, and we have different suppliers, like we have a escrow account service provider, payment gateways. We are looking for a custodian as well. So, but my question is like when it comes to a scalability of a platform where we are trying to scale into different jurisdictions, we look for another cycle of partners who are regulated in those regions. So, like we again have to go search for the new suppliers who can serve the users and that particular geography in that particular jurisdiction. So, what should be the technology which should be adapted in that which can be scaled on all the jurisdictions, so that we don't need to come again like the go to market or the speed up of entering into another market can be faster than waiting for another setup of all the structure and architectural understanding of the things in those markets. So on the scalability side, what should be the technology being adopted which makes the life or the entering into another market would be easier or faster.
You mean like piggy banking off another company's regulation?
Basically, what kind of a technologies should be adopted to make it ready into the different, which will allow us to enter market faster into the different geographies altogether.
Yeah, but are you talking about being able to go into that market with yourself, and like where do you stand with regulation? Do you mean like you want to partner with someone that's already regulated in that geography?
So probably from your experiences, like you scale up in the EU market.
Yeah.
So what routes you actually used, whether it's partnering up with the local partners there, or probably you entered yourself and try to get a direct regulation search for the vendors, or you rely on the other partners who are already operating in those regions?
Well, we basically partner with them using APIs. But I mean, it's very dependent, I guess, on the partner and how forward thinking they are in terms of tech. I don't know whether there's. I don't think there's a standard.
That's an issue that every fintech as it expands has to deal with. Brexit obviously was a lot of fun for a lot of fintechs certainly in the UK of having to then become licensed, have interim solutions of piggybacking using agencies and etc. I don't think there is. So to unhelpfully answer your question for the future, I think, I don't know if Fresh would agree, probably not, but as a blockchain, in terms of remittance, blockchain absolutely is going to be a massive game changer when it's able to do volume and interoperability between different blockchains. But I think at the moment, when you go into different countries, you need to find a local payment provider. You need to find a local partner who's going to be your source, whilst you get your feet on the ground. And then you can work out if you need your own license or not. Obviously, there's a cost benefit of having a license and using someone else's. Your margins are going to be drastically different.
Yeah, I mean, the only thing I can add to that is if you look at providers such as Plaid and Railsbank, that's the model they've got, where if you want to kind of almost create a bank out of the box, you latch on to Plaid or Railsbank and you say, hey, can you kind of provide me that service? You take the charge, whatever you want to take, but I'll front end the whole operation, and in the back end, it's using Plaid or Railsbank, say, infrastructure and regulatory permissions.
They have a place when you're trying to show product market fit in terms of actually generating revenue. But if you're actually looking again, as I was saying earlier, in terms of financing, raising money, wanting to show your unit economics, ultimately you probably need to start doing it yourself. Otherwise, you're actually unlikely to make the profitability from it.
There's a lot of problems as well with piggy banking off. I mean, we've experienced it ourselves, and it's been absolute pain in the arse, if I may say so. But there's a lot of problems. You're relying on their technology. You're sometimes helping them build their technology. Railsbank.
Their roadmap as well.
Yeah,
you can't change it. Like, we want to go to this country. It's like, well, we're not forecasting to be there for another 2 years.
And a lot of these agency models, like those that you mentioned, they're under massive scrutiny by the regulator now.
Yeah.
Massive scrutiny. The whole reliance model is under a lot of strain. So that's what it is. It's a reliance model. So you're going under their platform, and you're going to have a reliance. They're going to have a reliance model on how you do your due diligence, etc. But that's under massive scrutiny now because they're finding it very difficult to control.
I guess that's about it. Well, thank you. Let me sort of compose my thoughts. I think if I do a rough estimation, and probably people who have been there in the past 2 episodes would agree, we probably had faced more questions, cross questions in this episode of Tech Tuesdays in the last 2 episodes. Yeah, so I guess all thanks goes to the speakers as well as the guests out here. Maybe a round of applause for them as well. A couple of things before we head for drinks, which is again sponsored by our partner Karen Heads. James is out here, and obviously a partner deserves a round of applause as well for holding us, organizing us, helping sort of fulfill this particular dream of ours. The next Tuesday, Tech Tuesday, is taking place on the 4th of April, wherein the theme for that evening is going to be Space Tech. We've got confirmations from Paul Fabry, who is the CTO of Satellite Catapult of the UK. We've got confirmation from Rebecca Irving, who is from the UK Space Agency. And we've got a couple of more people joining. So if you really want to be part of that event on the 4th of April, kindly go to the Tech Tuesdays website and register yourself. And if you think of other people who you think may be interested in joining and attending the event, please invite them. As I said in the beginning, while we obviously sort of beg for networking and drinks, we will invite some of you guys to sort of share with us a few anecdotes of yours in terms of what's your overall experience. So Anjali is here, all thanks to her. She's been the one who's been sort of volunteering us from day one, and she's been a big thanks to us. I guess this is your last volunteering experience. So I guess that's from my side, and thanks again to each one of you for joining us, for motivating us, for sharing your thoughts. Thanks to the speakers for taking the time out. Thanks to the guests for being here. I know it's a little late in the evening, so kindly, yes, please feel free, bring yourself up down there. Thank you. Enjoy the evening.